Good evening and welcome back from the Labor Day weekend. Duane Lowry here for the DPP Grain Desk with a commentary on Monday afternoon, September 5th, 2011. While the grain trade was closed Sunday night and today due to the Labor Day weekend, some outside markets were open and they were clearly focused on weak economic outlook and the European debt problems, sending global stock markets lower and setting a heavy tone for the initial grain trade openings tonight. At the time these outside markets finished trading today, gold was up $25.90, crude oil was down $2.85, the Dow index was down 208, and the U.S. dollar index was up 38. Grain traders may also be bracing for Informa's latest production estimates that will be released tomorrow morning, which many believe won't be as large as other recently seen private production estimates, and their figures won't match recent trade rhetoric that has driven down yield expectations to 148 or lower on corn and 41 or lower on soybeans. Weather during the weekend provided better than expected moisture, but amounts in the driest areas were light. Harvest is fast approaching, and we have pretty much entered the it is what it is phase of crop development. Weather will be given a bearish spin, but with very little moisture opportunities visible in the forecast for the driest areas, few may be willing to embrace any initial bearish weather spin and may still choose to focus on perceptions of poor overall national yield potential. Outside market weakness amid concerns of slowed economic activity will cast a cloud over commodities and weigh on grain sentiment tonight. Better than expected weekend moisture will also fuel that early weakness. Technical conditions are vulnerable to triggering expanded liquidation pressures. All this will lead to a lower start and quite possibly increased selling energy from multiple sectors of the trade as the night evolves and into tomorrow's trade. However, there are a few that are willing to embrace any bearish stance here. Also, while the outside markets are clearly beginning the week under pressure, it is possible that the worst of this sentiment will quickly print the week's lows. Obama will address the nation and Congress on Thursday night, and he will undoubtedly promote a bold approach to help fuel job creations. While there is no appetite in Congress to pass stimulus measures, there are broad overlapping agreements between the U.S. Chamber of Commerce job creation proposals and President Obama's expected plan, not the least of which is to push to quickly expand infrastructure spending and put construction workers back on the job. Agreements over corporate tax incentives may also exist. So it is possible that as we approach the latter part of this week, there could be a return to optimism towards Congress's ability to reach consensus on government spendings and job proposals. Now, while we may be able to have some initial panic pressures in outside markets tonight and tomorrow, this may be reversed as the week progresses. And while this may argue that we shouldn't embrace any early weakness in grains that appears to be driven by these outside markets, the grain trade is also facing pressures from harvest being just ahead and the threat of expanding liquidation pressures. From a market that's already saturated with speculative length and recent price action that offers warnings, the bullish arguments have been fully discounted. We have limited upside potential in the grains from current levels, but current downside movement before next Monday's USDA September report may also have some limitations. Time will tell. As for me, I believe current trade yield ideas have been ratcheted lower than warranted, and I fully expect yield ideas to rise from current levels as the harvest activity evolves during the next few weeks. I see a market that is saturated with speculative length and performing in a manner that suggests this is a fully mature rally. Seasonal harvest pressures and a poor economic backdrop threatens to produce lower prices in the weeks ahead. If yield rhetoric begins to increase from the recent trade chatter that we've had for the last several days, then we will be poised for a much more aggressive liquidation phase than any of the current holders of long positions will be willing to carry positions through. Downside risk remains very significant from current levels. For the DPP Grain Desk, this has been Duane Lowry. Thanks for your time and attention.